Hi, this is Paul from globaltradingsoftware.com, and this is a futures trading tutorial of when not to trade and when to trade. So I'm using the NinjaTrader platform because we have the Guardian zones on there, the xBrat Guardian zones, which are automated support and resistance zones on multiple time frames. And then what I've got on there is the xBratAlgo with those 5 and 6 star sell signals and things like that. Remember, when an algorithm is formed, it is formed on a set of rules, and when those rules are met, it gives a signal. The xBratAlgo is one of those types of trades. However, what it can't do is it's programmed for 12 points of control, but those points of control don't take into effect recent support and resistance zones on multiple time frames. So I'm on the 3-minute Heikin Ashi right now, but what I've done is with the Guardian zones, the xBrat Guardian zones, they're there to keep you safe. So you're there to make sure that you're trading between the zones and you've got lots of fresh air when you get a signal. If you don't, you don't trade. So at the moment I've got the current time frame on, which if I just zoom out a little bit is like an orangey beige color. The 15-minute is blue and the 30-minute is green. I could check on the 60-minute as well. For example, here, that's where the 60-minute time frames will be as well. So you see this bottom time frame, very, very strong support here and strong resistance up there. So I'm going to leave those on. I'm going to go through the last 24 hours or so of signals, which signals you should have taken and were winners, and then the ones you shouldn't have taken because there's not enough risk to reward. It's a very, very simple equation, this. No matter which signal software you have, you need to make sure you got enough fresh air. And what we've got with the Guardian zones is an extremely complex logic to be able to look at the support and resistance zones on multiple time frames on the one chart and take them off if they're not tested properly, or put them on if they are tested properly. So it's current, it's live all the time. So we get yesterday in the European morning, we get a 6-star buy signal at this point here. It's just found support at the 15-minute support zone there, even though we're on the 3-minute. This is a good signal because we look for a stop below the support and resistance zone, below the previous pivot before the xBratAlgo signal candle. Then we measure that risk reward, and we've got a 1 to 1.6 into that resistance zone, which is the current 3-minute and a 15-minute combined there. So very, fresh air. We take the trade. Good trade, hits the resistance zones, comes back down, and then goes for it again. So there's a good trade there. We use the manager, this ribbon here, to manage that trade all the way into the zone there. Fantastic trade. And that is what we would call a typical example of coming to test a support, getting an xBratAlgo signal, getting fresh air, taking the trade. The next one though, we get a 6-star sell at this point. The pivot before this signal was all the way up here into this 60-minute and 15-minute resistance zone up here. So we take the stop here, the entry here, the risk reward is less than 1 to 0.3 or something like that. No fresh air, don't take the trade. Fizzles out, we get a 5-star buy signal. Again, previous pivot stop is here, entries here, 1 to 0.5. No risk reward, no fresh air, don't take the trade. Comes back down, get another 6-star buy. Again, previous pivot is here, not enough fresh air, don't take the trade. Comes back down to test that support zone again, and comes back down to test that support zone again. And this is where it prints the current 3-minute, this little beige one here, which is really crucial. So now we've got a convergence between this 15-minute support zone, but now we're forming a little support zone on this 3-minute as well. Very, very strong. We do get a 6-star buy signal at this point here. The previous pivot's here, the stop's just below, entries just above that signal candle, risk reward of 1 to 2 to the next resistance zone. We take the trade, and hey, presto, it's a winner. We move forward, we're testing that resistance, which is both 15-minute and 30, you see the green there. Keeps testing. Now we start to form a zone on this 3-minute time frame. We get a 6-star sell signal. The previous pivot is here before the 6-star sell candle. Our risk reward is 1 to 2 to the support zone. We take the trade. Great trade, big winner. What a surprise. We move forward. We get a 6-star buy at this point here. We don't take this trade. Why? It's a Thursday. We're going into data. We're waiting for the data reaction. You see how the price action turns up. We get the data reaction on this big candle here. The next candle, 6-star buy, 6-star sell signal, breaches that 15-minute support zone that we've been using for the last 24 hours. This is crucial, okay? So now we get this 6-star sell signal. Our entry, I just need to adjust this, is just below that candle. So we just want to adjust that to there. Cancel that second. So we're just going to adjust that to there. Stop above that point, and that's our entry. So our risk to reward to the next support zone, which is 30, 60, 15 and the 3 minute, that down here is 1, even though to 1.6. Great risk reward, great fresh air, we take the trade. This is where we are right now with gold. So we've got the manager with the ribbon in red. It's still red, we're still in this trade. It may come back up to test this previous supporter's resistance. I mean, that's normal behavior before it goes back down again. If that ribbon turns to green, we get out. There we go, right live right now. We've just printed a new support and resistance zone. Automatically this amber zone here, which is the 3 minute Heikin-Ashi, has just been put on the chart automatically. So this now, this gives us some confidence. If we now then move, if this price action does move down and breach this low pivot here, we can put a stop just above this new recent resistance zone here. We'll be risk free and we'll be locking in, 15-20 ticks. So again, that's really good. I didn't plan that. That's what happened. It's automatic. It's put that zone in now. Why has it put that zone in? Because it's tested previous. Okay, so yesterday, Thursday, we had a big pivot here. And then today, within a certain percentage, it's automatically tested it here, this pivot here, and then from below here, it prints automatically. And this is the beauty of the Guardian zones now. So this is great. This is it's going to be helpful for our trade management now, because what will happen is, just going to keep an eye on this. If we now get this push down through this pivot, we can adjust our trailing stop to this position here. That will now make us risk free and lock in profit, because if it does push through, we could come back and test here and go out. So this is really good for our trades managers as well. So check out the links below for the xBratAlgo for those great signals, but also don't forget, everybody in that has Ninja Trader should have the Guardian zones. It's a subscription. It's €50 a month, which is nothing. This will keep you out of trouble. And that's the whole idea when you're trading, whether you're day trading or swing trading. You need these automated support and resistance zones on multiple time frames to keep you out of trouble, to stop you shorting into support or going long into resistance. And they need to be live and automatic. If they're continually tested and you get a new zone printed, you need to be respecting it. All of a sudden, if a zone is not being respected, the software, the logic will take it away. So hopefully check those links down below, and we'll see you on the other side.